So, welcome to another video. My name is Robin, and as per usual, I'm joined by Kirill. And today we're gonna discuss most things you need to know about stocks before you invest in them. So basically, what are stocks? What kind of stocks are there? What type of publicly traded stocks are available? And how can you manipulate stocks, or at least, use them in your advantage? So without any further ado, let's get right into it. So what is a stock? Well, stock basically is a small percentage into a holding, right, or into a firm. So when you're buying a stock of Apple, let's say, you're holding a tiny fraction of ownership into Apple's company. So that's in a nutshell what a stock is. So that's also something how you can view when you buy a stock that you're actually a company owner, at least to some extent. Then there are two kinds of stocks. You have the publicly traded stocks and the privately traded stocks. So the privately traded stocks, you can, for example, think of private equity, smaller firms of where people actually own shares, but they're not publicly listed on the stock exchange. And then again, on the other hand, you have publicly traded stocks, so your Google, Apple, Amazon, where you can find the prices of what they're going for, and you can pick them up whenever you want, basically. So within the publicly traded stocks, you have a couple of options you can choose. You have common shares and you have preferred shares. And preferred shares are probably the ones that you will be looking after and the ones you will see the most. And here we'll just quickly outline the differences. So with preferred shares, you really do not have any voting rights. So you are just basically buying the stock, and you keep the decisions up to the common shareholders and the board and the employees, let's say. But the pros, on the other hand, is that you will have priority during liquidation events. So say that the company is going bankrupt, then first the preferred shareholders will receive the capital, after which the common shareholders will receive capital. And then depending on the how the dividend is structured, or if the company even pays a dividend, as a preferred shareholder, you know what kind of percentage you're getting. So if a company is paying a 5% dividend yield, as a preferred shareholder, you know that you're going to receive 5% dividends, and you're also going to receive dividends before the common shareholders receives any dividend. So now you might be thinking, then why would you want to invest as a common shareholder? Well, a common shareholder might have a bit more upside. So they might not even receive a dividend. So it's not fixed. They might choose not to give their common shareholders dividends at all, but they also might agree to give them dividend, and it might also be a bit more than the preferred shareholder receives. And on the other hand, whereas with preferred shareholders you don't have voting rights, you do have voting rights with common shareholders. So if you really want to make a difference into a company, if you think that you have the brains to really move a company to a better way and get returns faster that way, as maybe an activist investor, then common shareholders are the stocks for you. But as mentioned previously, you will probably and likely be starting with preferred shares. And then the personal finance. So how can stocks really help you with your personal finance? Kirill, take it away.
Yes, sir. Pretty much, it's a very interesting instrument, right? Which you can actually use in order to build your wealth and accumulate and probably save your wealth. Is just by investing in individual stocks of individual companies, right? Just owning a bigger pieces of the pie. Simply put, because statistically speaking, usually the returns on investments into stocks is higher, of course, than the average inflation rates, especially when it gets to the US economy, right? We're talking about inflation around 2-3%, but the stock market, especially S&P 500 index, returns around 10 to 11% a year, right? So this is you beating the inflation at least and accumulating a little bit more money. However, it's also important for you to keep in mind that if you decide to invest in individual stocks, this is way riskier endeavor in comparison if you would start investing in a fund or an index, as I mentioned, the S&P 500, right? So this is also something that we're gonna check out in the next video. For example, what is an exchange traded fund, which is a simulation, let's say, of an index fund. But this is something for another video. So stay tuned with us. Make sure to leave a comment, like, dislike, whatever you feel like. If you want to learn more, check out our other videos on our channel. Check our website, link in the description, and see you in the next videos.